Welcome to our deep dive into the corporate world. Today, we're unpacking the 2024/25 results of a real Sri Lankan heavyweight, Ambion Holdings plc. In this explainer, we're going to see exactly how a major conglomerate fundamentally transforms its entire corporate strategy in the wake of some immense national economic turbulence.
So the theme they've chosen for this year is Enduring Ambition. And honestly, it's a highly fitting title. MBA is currently at this fascinating crossroads, navigating a stabilizing but still incredibly complex Sri Lankan economy, all while executing a massive, decisive portfolio pivot. We're literally witnessing a huge shift away from traditional manufacturing and straight into the arms of technology and financial services.
Their overarching vision is re-engineering success. And as they've stated, they aren't just managing legacy businesses anymore. They're actively seeking to transform latent opportunities into highly lucrative ventures. Over the past year, they proved this wasn't just, corporate speak. They actually made the bold move of divesting their majority stake in Denkatua Porcelain, a huge traditional manufacturing asset, just to free up capital and double down on high-growth, future-ready sectors.
Okay, let's jump straight into this explainer's roadmap. We're going to cover the macro rebound, the portfolio pivot, sector performance, their disciplined financials, the people and culture engine, and finally wrap up with their cautious optimism for the future.
Section 1. Macro Rebound, the Sri Lankan Backdrop.
Before we talk about their internal moves, we really have to talk about the backdrop, because to understand Ambion, you have to understand the economic fires Sri Lanka is emerging from. Just a couple of years ago, late 2022, inflation was an absolute nightmare, peaking at 57.2%. But what a turnaround. It was basically economic whiplash as the country transitioned into mild deflation by early 2025. The rupee also stabilized right around $2.99 to the US dollar. For Ambion, this meant they finally had the ultimate corporate luxury, predictability for long-term capital allocation.
And that predictability was backed up by a remarkably strong post-crisis rebound. Sri Lanka's real GDP grew by an estimated 5.0% in 2024. After consecutive years of contraction, this definitively signaled a shift toward a sustainable economic trajectory driven by real gains across services, tourism, and industrial activity.
Furthermore, gross official foreign reserves surged from under $20 million during the crisis peak to a very healthy $6.5 billion by March 2025. That external sector stability is exactly what restores the investor confidence that Ambion's financial divisions rely on so heavily.
Section 2. The Portfolio Pivot, Reallocating Capital.
Now for the meat of this strategy. How is Ambion becoming leaner and more focused? Well, they made a decisive, highly calculated choice to step away from non-core manufacturing. They aren't trying to be everything to everyone anymore. Instead, they're redeploying that freed-up capital straight into digital and financial ecosystems that promise scalable, future-ready growth.
You might be wondering, where exactly did all the money from the Denkatua Porcelain divestment go? Financial services and banking. They acquired a 9.43% stake in DFCC Bank and bumped their holding in Salin Bank up to 9%. This is a massive, highly targeted bet, and Ambion clearly views these banks as the critical engines of the national economic recovery.
Section 3. Sector Performance across tech, finance, and real estate.
Let's look at the competitiveness of these clusters, starting with technology. Millennium IT ESP is undoubtedly the crown jewel of their portfolio right now. For the first time in its 29-year history, revenue surpassed the $50 million milestone. That's over 15.6 billion Sri Lankan rupees. Even more impressively, their profit after tax effectively tripled, jumping from 36 million to 109 million rupees. This was the direct result of purposeful reinvestment into high-demand areas like AI, cybersecurity, and cloud solutions. Plus, they're rapidly expanding their global footprint across Singapore, Bangladesh, the UAE, and now Australia.
Over in the financial services sector, their dominance is just crystal clear. Tapperbain Investments remains the absolute market leader in money broking in Sri Lanka. They command a massive 39.1% market share in government securities transactions. They also hold over 12% of the foreign exchange market, making this division an incredibly reliable, high-volume engine for the broader group.
Meanwhile, their real estate arm, Colombo City Holdings, is playing a very strategic game of corporate patience called land banking. Instead of rushing to build, they're securing prime properties. They've got an 8-acre prime beachfront property in Koskoda, an inland property near Sigiriya for ecotourism, and a massive 73-acre estate in Agana Kolapalasa.
They are patiently waiting for tourism and wellness trends to absolutely peak before developing these into high-value lifestyle destinations.
Section 4. Disciplined Financials, a Deliberate Phase.
Well, let's get into the hard numbers here because we have a bit of a mystery. If the tech division is tripling profits and the financial sector is dominating, why on earth did the overall group profit after tax fall by 34% down to 2.02 billion rupees? What's going on there?
Well, the chairman, Sujiva Mudalige, clarifies this beautifully. He calls it a deliberate phase of repositioning. Last year's profit numbers were artificially inflated by massive one-off gains from selling the Denka to a group. When you strip away that one-time windfall, the core business is remarkably healthy. In fact, actual core revenue grew steadily by 2% to 17.5 billion rupees. More importantly, their total assets surged by 31% to over 30 billion rupees.
Now, it's definitely worth noting that to fund those high-yield strategic banking acquisitions we talked about, total debt did double from 4.3 billion to 9.3 billion rupees. That pushed their gearing ratio up to 39.7%. However, their liquidity remains incredibly strong. This capital structure is highly deliberate, setting a rock-solid foundation for future growth and diversification.
Section 5. People and Culture, the Human Capital Engine.
A brilliant corporate strategy means absolutely nothing without the right people to execute it. And Ambient knows that to pivot into tech and modern finance, they need top-tier talent. At Millennium IT ESP, employee costs actually rose by 30 to 40% because they aggressively moved to retain the absolute best minds in AI and cloud computing. They also restructured the board to bring in specific sector expertise.
They've also completely modernized their HR. They launched a Udemy online training platform, rolled out tiered university engagement strategies to build future talent pipelines directly from campuses, and even deployed Summit AI, an AI-driven HR support system. It's a total top-down modernization of how they manage their workforce.
Section 6. Cautious Optimism as we look ahead.
Moving into the final stretch, the overarching sentiment from leadership is one of cautious optimism. Yes, Sri Lanka is reforming, presenting massive opportunities, but they clearly flag geopolitical fragmentation as a major risk. Proposed U.S. tariff regimes and escalating global conflicts pose very real threats to global trade systems, which could directly impact Ambion's export-oriented tech and manufacturing arms. They are hyper-aware of these vulnerabilities.
Which leaves us with this final, provocative thought. By shedding rigid legacy manufacturing and aggressively pivoting into adaptable tech, land banking, and financial services, Ambion has basically built a shock absorber into its corporate DNA. As global trade policies shift and geopolitical risks loom larger, is this agile, relentlessly forward-looking portfolio the ultimate blueprint for corporate resilience in emerging markets? It's a fascinating question, and one to keep an eye on. Thanks for joining me for this explainer, and we'll see you next time.